Hold on to your hats, folks. In an unprecedented move, Google's parent company, Alphabet, has announced its first ever dividend. Now that's a headline you don't see every day. Alphabet, the tech behemoth that houses Google, has traditionally shied away from such financial practices. Yet here we are, witnessing a significant departure from the norm. This dividend declaration has certainly sparked a flurry of reactions. The stock market and investors are abuzz with speculation, discussion, and even a hint of disbelief. After all, this is Alphabet we're talking about. A company known for its steady growth and reinvestment strategies, suddenly switching gears and offering a dividend payout. It's like seeing a unicorn in the wild. The financial world was left reeling as Sundar Pichai, Google's CEO, commented on the company's recent quarter results. The announcement was met with a mix of surprise and intrigue, but most importantly, it piqued the interest of investors worldwide. And why wouldn't it? Dividends are often seen as a sign of a company's financial health and stability. They're a clear indicator that the company is doing well enough to share a piece of the profit pie with its shareholders. So what led to this surprising shift in Google's financial strategy? Well, the answer to that is as complex as the tech giant itself. Factors like market conditions, company performance, and strategic planning all play a role in such decisions. But one thing is for sure, this move has placed Alphabet under a whole new spotlight in the realm of stock investments. So, as we find ourselves in the midst of this historic moment, the question on everyone's mind is, what does this mean for you as an investor? Well, as the saying goes, change is the only constant. And in the ever-evolving world of tech investments, this change could very well be the next big opportunity knocking at your door. A historical moment indeed for the tech giant, but what does this mean for you as an investor? Let's delve into Alphabet's financials to understand the implications of this dividend announcement. Alphabet, under the ticker symbol Google, has been a stalwart in the tech industry for years with a reputation for solid performance and a history of growth. As of today, Alphabet's price-to-earnings ratio, or PE ratio, stands at a robust 29.3. This ratio is a key indicator of a company's profitability, with higher numbers generally signaling a more profitable company. This figure puts Alphabet comfortably ahead of many of its tech sector peers, underlining the company's consistent ability to generate profits. Now, let's talk about the current trading price. Alphabet's shares are presently trading at around $172 each. This represents a significant appreciation from the trading price of just a few years ago, reflecting the company's continued growth and the market's confidence in its future prospects. But what makes this moment particularly interesting is the comparison of these figures with those of previous quarters and years. Over the past 5 years, Alphabet stock has seen an average growth rate of around 20% per year. This steady, long-term growth has made Alphabet a favorite among many investors seeking both stability and returns. And now, onto the main event, Alphabet's first-ever dividend announcement. This is a significant departure from the company's previous strategy of reinvesting all profits back into the business, a strategy that has served it well over the years. The decision to pay a dividend is often seen as a sign of a company's confidence in its continued profitability. It's a signal to investors that the company believes it can afford to return some of its profits to shareholders, while still having enough left over to invest in future growth. Clearly, Alphabet is in a strong financial position, but how will this dividend impact its future? As investors, the key question is, how does this dividend announcement impact us? The announcement of Alphabet's first-ever dividend is a significant milestone in the company's history. This strategic move could potentially increase Alphabet's attractiveness as an investment. Traditionally, tech giants like Alphabet have focused on growth and reinvesting profits back into the company. But now, by paying out a dividend, Alphabet is signaling that they've matured as a company and are in a strong enough financial position to reward their shareholders directly. This could attract a new type of investor to Alphabet, the income-focused investor who seeks out companies that offer a steady stream of income through dividends. This could increase demand for Alphabet's shares and potentially drive up their price. While what they announced is only 20 cents per share, with a minuscule yield of 0.5%, this number figures to grow. Along with the dividend announcement, the company also announced the $70 billion stock buyback plan as well. This caused the aftermarket shares to skyrocket 16%. We love the free cash flow numbers and a company announcing the buyback plan, but it's also important to consider the potential risks. Alphabet's decision to pay a dividend may signal that the company's rapid growth phase is slowing down. Some investors might interpret this as a sign that Alphabet's best days are behind it. However, it's important to remember that Alphabet is a diverse company with a multitude of revenue streams, and its core business, Google, continues to be a dominant force in the digital space. Looking at their financial statements, it was almost a must for them to pay out this dividend, reporting a $69.5 billion free cash flow, a number that just kept rising. Essentially, they have more money than they know what to do with. Furthermore, the introduction of a dividend could potentially impact the future performance of Alphabet's shares. Historically, companies that initiate a dividend tend to have lower volatility, which could make Alphabet's shares a more stable, albeit potentially less explosive, investment. In terms of rewards, the introduction of a dividend could provide a steady income stream for investors in addition to any potential capital gains. Personally, as a dividend investor, this was a huge thing for me. Google was one of the very few stocks in my portfolio that didn't offer the passive income that I desire for my financial freedom. Well, we can check that off the list now. This could be particularly appealing to income-focused investors or those looking for a more balanced portfolio. It's also worth noting that dividends are typically a sign of a company's confidence in its future earnings. This could suggest that Alphabet's leadership expects the company's strong financial performance to continue. So, whether you're a seasoned investor or just starting your journey, it's clear that Alphabet's dividend announcement is a game changer. Now that we've dissected Alphabet's dividend announcement, it's time for you to make a move. As we stand on the cusp of this new chapter in Alphabet's history, it's essential to reflect on what this could mean for your investment strategy. Will you be bolstering your portfolio with more Google shares? Or perhaps you're considering adding it to your stock watch list, keeping a keen eye on its performance in the coming months. As you ponder over these choices, think about the Magnificent Seven, the 7 most significant stocks that continue to shape the global market landscape. Could Google be ascending up these ranks, carving out a stronger position for itself? Whatever your decisions may be, remember this is just the beginning of your financial journey, and every step you take brings you closer to that coveted goal of financial freedom. Remember, your journey to financial freedom is just beginning. Don't forget to like, subscribe, and share this video to help the channel grow. Stay tuned for more insightful updates and analysis on your favorite stocks.